September was another ugly month for investors. All of the major indexes were down around 10%, and there has been extreme fear of a market crash and a prolonged recession. In other words, it was another great month to be a dividend cash flow investor. Not only is it easier to not freak out when the markets drop in value, but even more importantly, the cash flow keeps rolling in. In the month of September, I generated the most cash flow in a single month since I began tracking the cash flow portfolio every month and sharing my results with you guys in complete transparency. I have been very transparent about how I generate this level of cash flow, and I will show you my own holdings and options activity that led to this cash flow for this month. I do not have a $1 million portfolio. I don't even have a quarter of those assets. Furthermore, our family has never generated more than $100,000 in household income, though this year, 2022, may be the first year that we break through. I am married and I have 4 kids. I don't stare at charts in my brokerage account all day trying to squeeze every ounce of cash flow possible out of the account. Who's got time for that? My approach is simple and straightforward. I spend less than 3 hours every month actively in my portfolio to generate this cash flow. Alright, as a reminder, I put this cash flow report out every month to you guys in full transparency, and I also keep my Patreon community updated throughout the month with the options trade I place in the portfolio the day I complete them. If this is something you are interested in, along with joining the elite dividend investors already in the Discord chat in that Patreon community, check out the link in the description below. In this cash flow report, I compare my results in my own portfolio to the following alternative investment options. First off, the S&P 500 index via the ETF SPY. Then we have the NASDAQ 100 index via the ETF QQQ. Now, these are used as alternatives to the dividend investing strategy to show differences in portfolio value between the two strategies. I recognize these are not normal cash flow investment strategies. Then we have the following alternatives for dividends and cash flow. We have the Schwab Dividend ETF SCHD, the Global X NASDAQ 100 Covered Call ETF QYLD, the Amplified Dividend ETF DIVO, and the JP Morgan Dividend ETF, JEPI. We are looking at both capital appreciation or the changes in overall portfolio value, as well as the level of monthly cash flow. Here's where I track all of the deposits I have made to the account since I started tracking the portfolio in January of 2021. This is an apples to apples comparison for all the investments in the sense that anytime I deposit new money to my account, I make sure that the same amount of money is invested into these alternative investments on the same day. So let's take a look starting with just the month of September. You'll notice that my value as of August 31st was the highest of all the investments reviewed. And now that September's in the books, I still have the highest portfolio value. Mine went from $164,000 to $154,000, which was a 6.32% loss. However, this was the smallest loss. There was really a 3-way tie for second place between SCHD, Devo, and JEPI. SCHD lost 7.4%, Devo lost 6.88%, and JEPI lost 6.35%. QYLD went from 130 down to 121, or a 7.28% loss. QQQ went down nearly 9%, and the S&P 500 went down 9.24%. For the month of September, I generated $3,637.67, and I'll break that down for you here later in the video. Second place went to JEPI at $1,556.76. Then we've got SCHD at $1,375.74. And then Global X QYLD at $1,262.27. One thing to note here is that Schwab pays a quarterly dividend. So in reality, this number is much lower when you make it a monthly cash flow figure when you factor it across all 12 months. The S&P 500 also pays quarterly, and that was $588 in cash flow, and QQQ paid $230. All right, let's move on to year-to-date 2022 performance. You'll notice here that I've got my ending values as of December 31st right here, and you've got my cost basis. This was a big feedback item that you guys had from my last video that I didn't have a clear cost basis. These figures right here are a combination of both the ending value as of the previous calendar year, plus the sum of all deposits made year to date right here. My portfolio over the entire year has lost $14,885, and that's a total capital percentage loss of 10.68%, but this is the lowest loss among all of the investments. QQQ has lost nearly 36%, S&P 500 has lost 28%, Schwab is down nearly 20%, Devo is down nearly 17%, QYLD is down 26.5%, and JEPI is down 16.34%. And you'll notice that my portfolio generated the most cash flow year to date at $14,439, second place going to JEPI, followed by QYLD, Devo, and then SCHD. And then we've got total cumulative performance from January 2021 through present day. We've got our starting balance of 52,173.16. And then this cost basis right here factors in these starting balances plus all of the deposits that have been made here beginning in January 2021. The cost basis for all these investments is $146,602 and 62 cents. This is first off the overall change in portfolio value, not factoring in the deposits. Okay, my portfolio is up the highest at 195% here, followed by got a few of them in the 170 range right here. All the portfolios are up because again, I've been depositing money, so it'd be pretty hard to have a loss here. However, the percentage gain or loss over the period, when you factor out the deposits, shows here that my portfolio is still up 14.5%. SCHD's is up 4.19%, Devo's up 3.68%, and JEPI's up 2.91%, but QYLD's down 40%, QQQ's down 40%, and the S&P 500 is down 19%. The top cash flow over the entire period, which is what I guess 21 months now, is $22,759 for my portfolio in first place, followed by QYLD at $21,644. Then we've got $15,000 for JEPI, $9,000 for Devo, $5,700 for SCHD, and then bringing up the rear, the S&P 500 and QQQ. Here's a review of the monthly income month over month since we started here. You'll notice that 2 out of every 3 months it only shows 3 investments, but that's because remember QQQ, SCHD, and the S&P 500 all pay quarterly dividends, so they're not going to show up every single month. In this, you'll see that my portfolio is in black, which is one of the highest ones, and QYLD's up there as well because they generate a lot of dividends. This is at the beginning of the period. Let's scroll over to the most recent few months. Some of these months, my portfolio was not as high because I wasn't as active trading options. This is mostly factoring in just dividend income, and it was still pretty high up there. The last 2 months have much higher cash flow rates because of the fact that I'm selling covered calls in my portfolio. Here's a review of the quarterly income breakdown every quarter. You'll notice that the top performers are my portfolio, followed by QYLD, and then also we have JEPI and Devo up there in blue and green. Now that Q3 for 2022 is in the books, I have the most dividend income here, followed by JEPI, QQQ right here, Devo right here, and then SCHD right here. Here's how we've tracked overall portfolio balance over the entire period, factoring in all deposits. Let's go over to the most recent months here. You'll notice that white is my portfolio, which has the highest balance. It doesn't look like the others because I don't have daily overall portfolio balance tracking here built into mine, since I don't track that every day. Whereas with these investments, I have the day-to-day ending closing prices for all of them from Yahoo Finance. My portfolio is in first place right here. We have a 3-way tie here between JEPI, Devo, and SCHD for second place. Pretty much they're all about $144,000. Then we've got right here in blue the S&P 500, and then down here in red QYLD, followed by QQQ. I recognize that QQQ was an amazing investment following the housing crisis all the way up to about 2021, and I don't have that factored in here because I don't go back that far. These numbers represent how the portfolio is done based on that initial investment of $52,000 back in January 2021 through today. Okay, so let's take a closer look at how I generated my cash flow this month. The total cash flow for the month was $3,637.67. Of this total amount, $991.35 was dividend income, and the remaining $2,646.32 was option income. I generate nearly all of my option income by selling covered calls on the quality dividend stocks in the portfolio, along with the index ETFs. Here is a clear look at all of the actual option trades that I made during this month. You'll notice I sold covered calls on Aflac, Best Buy, Colgate-Palmolive, Comcast Corporation, Devon Energy, Enbridge, Gilead Sciences, HP Incorporated, Intel, the Russell 2000 Index ETF, IWM. We've got a covered call on Manulife Financial, Altria Group, Schwab's SCHD, the T. Rowe Price Group, Verizon, ExxonMobil, and I'm also looking to get into the S&P 500 SPY, and so I've been selling cash secured puts to start that position. All of these figures here add up to the total amount you saw. We've got the dividend income right up here from all of these investments, Aflac, Aris Capital, Exxon, QYLD before I sold it, RYLD, Intel, IWM, JEPI, etc. Total amount, $3,637.67. One of the biggest pieces of feedback I got from the previous video was, well, great, you showed me a spreadsheet, but how do I know this information is actually what you did in your own portfolio? So for those of you that had that feedback, here are the actual transactions that I did in my core dividend portfolio starting in September. You'll notice you can see here the same things I talked about. Best Buy, we've got Verizon right here, Gilead Sciences, Comcast, Enbridge, Aflac, IWM right here. Here's Schwab, SCHD right here. These are all the investments. I'm not trying to spoof you guys here. These are all the dividends and all of the option trades that I did for the month. And here's a brief look at where the portfolio looks right now today. These are the exact same investments I talked about. Aflac, Best Buy, Colgate-Palmolive, Comcast, Devon Energy, Enbridge, Gilead Sciences, HP Incorporated, Intel, IWM, that's the index ETF for the Russell 2000, SCHD, T. Rowe Price, Verizon, and ExxonMobil down here. As I stated near the beginning of the video, this is an income strategy every single average Joe investor can implement if they choose to. It's not rocket science, and it doesn't require a massive portfolio to get started and be successful with. In the next video, we're going to talk about my top 5 dividend stocks for selling covered calls right now. And then the following video, I will break down for the complete beginner, how to start selling covered calls in your own portfolio. Make sure to leave your 2 cents down in the comments below, and thanks for watching, guys.